Okay, without any further ado, we'll start the session. Thank you all for joining the first maiden con call of Invest Value Capital PMS. So this is the first con call that we are hosting, or rather the client and partner meet that we are hosting after the first month of deployment in our PMS. So we'll take you through about the performance of the PMS. I'll take you through comments. I would request everybody to be on mute so that other participants can hear what we are saying. Thank you. Yes. So, as the maiden PMS, we will walk you through the performance of the first month, deployment strategy, how we have deployed and what was the performance, and how we fared in the first month of deployment. And then we'll also take you through to market outlook, what is our take on Indian equity markets, globe, and burning question that everybody's been asking about the return of the FIs. The FIs have been missing from Indian markets, and whether they will come back, and if they are coming back, when they are going to come back. In the interest of time and understanding, we will try and mix English and Hindi for our participants, because I understand a lot of you would want the session to be in English. तो हम mix करने की कोशिश करेंगे हिंदी और English की. Mostly it will be English because we are more comfortable in English, but we'll try to incorporate some of Hindi as well. On the call, I have Siddharth Purohit with me. He's the equity fund manager of Invest Value India Winners Equity Portfolio. So the performance, the stock picking, the brainchild behind whatever you see, key person is Siddharth Purohit sitting alongside me. I am Aditya Agarwala. I am the CIO of Invest Value Capital PMS. Together, we have tons of years of experience of managing money, managing wealth, and to all the partners and the clients who are part of this call right now, we thank you all for showing your trust in our PMS and giving us your money, and also trusting us in the way that we'll be going ahead in managing your funds. Okay, so with that out of the window, we will quickly move to what this webinar is all about and how we want to position this. So the topic of this webinar that we have kept is flows align, markets re-rate. Why this burning topic of flows align and markets re-rate? क्योंकि हमने देखा है कि अभी बहुत ज्यादा चर्चा हो रही है कि FIs फ्लो इज बिन मिसिंग फ्रॉम इंडियन मार्केट्स. FIs पैसे निकाल रहे हैं, और ये कितने दिन तक चलेगा? दी FI आउटफ्लो is hitting a 15-year low. And with this kind of outflow that we are witnessing in the FIs, how are we placed, and how Indian markets are placed, and what is the way forward for us? So we have got some interesting data points for you. Also to make sure that what we are talking is backed by good or proper data points. So हम उसके ऊपर लेके चलेंगे. सो पहले तो हम आपको एक ब्रीफ दे देते हैं ऑन द परफॉर्मेंस ऑफ द कैपिटल इन्वेस्ट वैल्यू कैपिटल PMS. फॉर लास्ट month was the first month of our deployment. So this is the performance in a quick snapshot. The portfolio was down just 2.9%, 2.09% versus the benchmark index of 11.37%. So we generated an alpha of 9.28%. हमने एक significant alpha generate किया in the first month of our deployment in Invest Value Capital PMS. The alpha was to the tune of 9.28%. And with this kind of alpha, we were ranked at number 5th on PMS Bazaar. Yes. So we also had put out our performance on PMS Bazaar. And amongst all the equity categories that are present, जितने भी equity categories है, उसमें हमारा PMS was ranked 5th last month. So that was a good start for us, though we know that this is at a very nascent stage or just the start. But yes, it was a good start for us because we adopted a staggered deployment strategy, which was back tested properly through a lot of data points, and we deployed money in all corrections that we witnessed in equity markets. With this, we also tried to maintain our beta of sub 1. So the beta was only 0.56 in the last month, and the maximum drawdown of the entire portfolio was just 4.9%. So that speaks volume about the kind of stock picking that we have done in the model portfolio, and the kind of opportunities that we are creating for long-term wealth creation, making sure that the downside is protected. हम make sure कर रहे हैं कि हम risk जितना कम से कम ले सके उतना ले, ड्रॉडाउन को प्रोटेक्ट करें, और रिस्क और ड्रॉडाउन को मेंटेन करते हुए एक सिग्निफिकेंट अल्फा जनरेट करें. उसी को मद्देनजर रखते हुए हमने ये मार्केट में डिप्लॉयमेंट स्ट्रैटेजी अडॉप्ट किया. With this, we saw that when we started rather the PMS in the month of January, it was a Goldilocks scenario for all of us. Growth 7% पे था, inflation just 2% पे था. RBI was cutting rates. Everything was going good for Indian markets. There was expectations earnings will return, re-rating will happen, FIs will come back. But Mr. Trump had other plans, and he went ahead and attacked Iran. And in a matter of 60 days, there was a complete shock, geopolitical shock, which reset everything. And the Strait of Hormuz was closed, which led to a sharp spike in crude oil prices. Crude oil prices ने spike बहुत massive spike किया, $128 पे गया. और हमको पता है अगर क्रूड ऑयल इतना ज़्यादा स्पाइक करता है तो इंडियन economy takes a major hit, current account deficit goes for a toss. And amongst all of this, we also saw rupee hitting an all-time low. And with that, we also saw a sharp correction in the Indian market. So from peak, Nifty was down somewhere around 16%. Okay, so with this, all of it and FI outflow increased significantly in the month of February. With all of this in place, we were very sure that that the valuations will take a correction, and once valuations take a correction in mid cap and small caps places and large cap, some of large cap names as well, we will do a proper stock picking and bottom up approach will adopt, and we'll do a staggered deployment strategy. So when FIs do exit, so we believe that FIs exit was just a rotation. It's not a verdict that Indian markets, Indian economy is done and dusted. In fact, it's just a rotation amongst emerging economies and emerging markets. With this rotation reverses, the setup says that market will not drift higher. They will re-rate. So this is what we believe in. And as we speak, we are still sitting on significant cash, waiting for opportunities. Dry powder is intact, waiting for opportunities to deploy further cash as and when the opportunity arises. Okay, so we'll walk you through all of this today quickly so that we know that how we are placed and what is the outlook of the market. Just to give you a brief, like I mentioned, Brent spiked $128 का spike आया. In this, during all of this that happened, Kospi saw a sharp fall, 19% हमने Kospi जो markets है, Korean markets उसमें fall देखा. Japanese markets में हमने एक significant 13% का fall देखा. And in fact, across all asset classes, we saw a de-risking simultaneously, and name it and all asset classes saw a massive correction. Be it gold, silver, जिसमें इतना ज़्यादा rally हुआ था, उसमें भी हमने sharp fall देखा. Especially silver prices crashed 30% in one or two trading sessions. So all of these indices and asset classes saw a significant correction. Our own markets had corrected significantly, about 16% from peak to trough, though we have recovered half of it in the first week of April, or rather second week of April, but still we are down significantly. So this is a small snapshot right now. From a high of $128 on crude, we have clawed back to $96, $95 somewhere around. Two things which did hamper Indian sentiments significantly. One was the spike in the crude oil prices. Second was the depreciation in the Indian rupee, and which also led to a sharp spike in the GSEC yield. We saw that GSEC yield took a sharp knock of beyond 7% at one point of time, which has now again clawed back to a cooling off to somewhere around 6.93 levels. And amongst all of this, like I mentioned, FIs continue to maintain sharp selling exposure. So this is the picture that has already played out. Now, with this in place, हाउ आर वी लुकिंग एट कि आगे आगे जाके क्या होने वाला है और आगे क्या इन स्टोर है. जैसा मैंने कहा कि एफआईज ने सिग्निफिकेंट सेलिंग किया है. दीज आर सेकेंडरी मार्केट नंबर्स. आउट ऑफ 23 सेक्टर्स, 19 सेक्टर्स में एफआई ने जम के सेलिंग की. और अगर मैं वाईटीडी आउटफ्लो की बात करूँ ईयर टू डेट, तो ऑलरेडी 1.72 लाख करोड़ का आउटफ्लो हमने एफआईज के तरफ से देखा है इंडियन इक्विटी मार्केट्स में. एंड जैसा कि मैंने स्टार्ट में कहा था, एफपीआई ओनरशिप राइट नाउ stands at 15-year low. which is significant. Just 16.9% in the Q2 of FY26. So 15-year low, historical low पे FPI ownership है right now. Significant outflow हमने देख लिया है already. YTD जैसा मैंने कहा 1.72 लाख करोड़ का outflow हुआ है. इसके सामने interesting data fact ये है कि DIs ने constant buying की है, and DI ownership right now is at an all-time high, and for the first time DI ownership has crossed FI ownership at 18.7%. So when FI ownership is currently at 16.9%, DI ownership is right now at 18.7%. So it's an all-time high thanks to the retail participation and constant SIP flows that we're witnessing month on month. इसके चलते DIs ने बहुत strong buying की है Indian equities में to the tune of 8.5 lakh crores, which has actually supported the fall in the Indian markets. Otherwise, we would also be down significantly in line with the other emerging markets and Asian peers. So these are some of the numbers, month-on-month outflow and inflow. As you can see, March month saw a significant outflow from FIs to the tune of 1,22,000 crore. उसी के सामने DIs ने 1.42 लाख करोड़ का बाइंग किया था, और ऑलरेडी अगर मैं अप्रैल मंथ की बात करूँ तो ऑलरेडी सिग्निफिकेंट आउटफ्लो हो चुका है. So we are sitting at historical low levels as far as FI ownership is concerned. We are sitting at historical all-time high levels as far as DI ownerships are concerned. And we all know we do need FI money. It's not that FI money की जरूरत नहीं है. We do need FI money because that leads to re-rating of the entire country and the economy, which leads to a significant upswing in the equity markets. And we believe that after this kind of an outflow, record outflow, and ownership at such record lows, it's time is prudent now that FIs will make a comeback. वो slowly and steadily वापस आएंगे इंडियन मार्केट्स में. ये कुछ पिक्चर है आपके लिए, आपके सामने, जो हिस्टोरिकली इसके पहले जब जब एफआईज ने आउटफ्लो किया था उसके बाद कितने टाइम पे मार्केट्स ने रिकवरी की है, और एफआईज ने वापसी भी की है इंडियन मार्केट्स में, ये भी दर्शाता है. देयर आर टू इंस्टेंसेस. एक 2008 सब प्राइम क्राइसिस हम सबको याद होगा, जबकि मैसिव एक फाइनेंशियल क्राइसिस आया था, जिसमें इंडियन मार्केट्स हैड क्रैश्ड 65% इन अ मैटर ऑफ 2.5 months. उस टाइम पे FIs outflow were somewhere around 53,000 crores. We are talking about 2008, when India wasn't a big part of their portfolio as well. Then also we had seen, say, 53,000 crore kind of a outflow. And what did we witness after 12 months? Immediately after that correction is Nifty ने 70% का रिटर्न दिया था. हालांकि रिकवरी टाइम भी ज्यादा था उस समय, बट 70% का एक आउट परफॉर्मेंस दिखाया था इंडियन मार्केट्स ने. एंड what is significant is after this kind of an outflow in next 5 months to a maximum tenure of 11 months, 5 से 11 महीना में AFIs वापस भी आते हैं इंडियन मार्केट्स में, बिकॉज उनके पास एक अपॉर्चुनिटी मिलता है आफ्टर दिस काइंड ऑफ अ सिग्निफिकेंट अंडर परफॉर्मेंस करेक्शन वैल्यूएशन कंफर्ट. FIs find risk to reward better in Indian markets, which is why they make a comeback in the Indian equity markets. Next 5 to 11 months में historically देखा है FIs make a comeback. Similar kind of a scenario was in 2018, where we witnessed global volatility, where FIs had an outflow of 33,000 crores. Then Nifty had corrected 16%, and time to recovery was somewhere around 5 to 6 months. And next 12 months में index ने 14% रिटर्न दिया था. अगर हम कोविड की बात कर ले, विच इज नॉट टू फार अवे, FIs ने एक मंथ में 61,000 और ऑलमोस्ट 62,000 करोड़ की सेलिंग की थी. दिस वाज जस्ट इन 1 month of March. And that was the time when Nifty corrected significantly by 40%. And it took 7 to 8 months to recover all of that fall of 40%. In fact, in the next 12 months, Nifty had given a massive return of 75%. So this is the kind of returns that we were talking about. Come 2022, जबकि जहाँ की फेड ने अगेन अपने इंटरेस्ट रेट टाइटनिंग किया था, वेयर वी हैड सीन never in the lifetime of inflation in the US economy. Then also we had seen significant outflow from FIs to the tune of 1.2 lakh crores. And then Nifty had corrected 19%, and it took 5 months for Nifty to recover that. And in next 12 months, it gave a return of 20%. Now, why am I showing you this kind of a picture? Just to tell you that history repeats itself. In the history, we have seen this kind of a correction in the Indian equity markets, and there were two instances when Nifty had corrected significantly lower, significantly higher, and FIs had witnessed a significant outflow of FI money, जो कि हम अभी भी देख रहे हैं. और 12 महीना में उसके बाद निफ्टी ने बहुत ज़्यादा आउट परफॉर्मेंस दिखाया है, और रिकवरी टाइम भी बहुत कम है। अगर मैं 2008 को अगर असाइड कर दूँ, सेट असाइड कर दूँ, 5 से 6 महीने में मार्केट्स पूरे के पूरे रिकवर करके एक अपवर्ड ट्रेजेक्टरी में चले जाते हैं। अगर मैं करंट सिनेरियो की बात करूँ, विच इज़ ऑन गोइंग, almost 16%, which is in line with the corrections that we witnessed in 2018 and 2022. 16% kind of a correction we have already witnessed on the index. Time to recovery, we are still in a recovery phase. We don't know what could be the potential outperformance in next 12 months. अगर मैं historically देखूँ तो anywhere between 15 to 20% on the index level is what we can think of. Somewhere between 15 to 20% minimum है, अगर मैं historical data को देखूँ तो इतना आपको आउट परफॉर्मेंस नेक्स्ट 12 महीना में इंडेक्स लेवल पे देखने मिल सकता है। अगर हमको इंडेक्स लेवल पे इतना आउट परफॉर्मेंस देखने मिलेगा, तो आप सोच सकते हैं कि स्टॉक लेवल पे कितना ज़्यादा आउट परफॉर्मेंस देखने मिलेगा। So, two things held true in this year as well, which is in line with the historical corrections. Drawdown was proportionate to the shock. ऐसा नहीं है कि drawdown बहुत significant देखा है हमने, and it was not because of any deterioration in India fundamentals. India's fundamentals remain intact, and the drawdown was in proportionate to the shock that we had seen. FIs re-rate within 5 to 11 months, जैसा कि मैंने कहा, they make a comeback in next 5 to 11 months of this massive outflow. And before the earnings inflection actually takes place, they start deploying money in India. So give it another 6 months, you will see FI money coming back. This 16% kind of a correction sits squarely within that historical range के अंदर ही है, कोई ब्लैक स्वान इवेंट नहीं है, और बहुत फेमिलियर पैटर्न है। डोमेस्टिक कैपिटल ने क्वेश्चन किया है इस बार एफआई मनी को, बट द मोमेंट एफआई मनी मेक्स अ कमबैक, you will see a sharp upside in the Indian equity markets as well. Now, why have these, how have been these DIs being able to cushion the Indian equity markets? हम सबको पता है कि SIP flows are at record levels, and अगर आप मंथ ऑन मंथ, एवरी ईयर ऑन ईयर, मार्च मंथ का आप अगर डेटा देखोगे SIP flows का, मार्च 2023, the SIP numbers, monthly SIP contribution numbers were just 14,276 crores. वहां से आपको आज के तारीख में मार्च 2026 में the SIP numbers were sitting at 32,087 crores. So you can see the significant jump in the SIP flows. The retail participation in 2023 March versus 2026 March has jumped significantly, more than doubled in the SIP contribution. So 3x the 2023 level almost. So this shows the kind of confidence of the investors, the retail, the HNIs in the Indian equity markets, and they are here for long term. They are not here for 1 or 2 days or short term trading. They are here for long term, and they know long term wealth creation can be made if you are disciplined and you deploy money in when the time is bad and when everybody is fearful. That is the best time to actually deploy money. And the numbers are out there for you. We are sitting at almost 74 lakh crores of equity AUM. आप समझ सकते हो 74 लाख करोड़ equity AUM है, which is significant. 40% equity share has risen steadily. And अगर मैं AU SIP की बात करूँ, FY26 में 15 लाख करोड़ का SIP गया था, through the AUM through SIP was 15 lakh crores, which is significant. 2.4x jump in last 3 years, and consecutively 61 month, in fact अब ये 62 month हो गया होगा जबकि हमने नेट इनफ्लो देखा है इक्विटीज में थ्रू म्यूचुअल फंड. And what is also alarming, what is significant out here is these numbers are only 5 to 6% of savings in equity still. हम जो 32,000 करोड़ की जो SIP बुक की बात कर रहे हैं, मंथली SIP बुक की बात कर रहे हैं, दिस ट्रांसलेट्स टू ओनली 5 to 6% ऑफ हाउस होल्ड सेविंग्स इन इक्विटी, विच इज 25% प्लस इन डेवलप्ड मार्केट्स. तो आप इमेजिन कर लो, अगर मैं 25% पे नहीं भी जाता हूँ, मैं उसका हाफ भी ले लेता हूँ, अगर यहाँ से भी डबल होता है हाउस होल्ड सेविंग्स इन इक्विटी, विच इज राइट नाउ एट 5 to 6%, अगर ये 12% पे भी जाता है, तो द अमाउंट ऑफ मनी दैट विल फ्लो इन equity markets in next few years will be enormous and will be phenomenal, which will drive the equity markets significantly higher. And if you look at the way the government has been pushing investments in equity markets by introducing new income tax laws, by cutting your income tax slabs, by introducing so many moves through to start more of consumption and start deploying money in equity markets. Mutual funds सही है, हम सबको पता है कितना ज़्यादा push किया है government ने. So all of it put together seems like the DIs are here to stay, and very soon we will also find FIs make a comeback. Okay, probably so. I will ask maybe Siddharth to take over from here, and we will now talk more about how the global markets have fared and how Indian markets have fared, and how the opportunity lies ahead for the Indian markets. Siddharth, over to you.
Yeah, thanks, Adi, and welcome everyone. So Adi has already kind of explained you the basics. How the market is structured and how the inflows and outflow has been. So I would like to explain that, why FIs have left India and what is the course correction from here onwards. So before understanding why FPIs, the foreign investors, left India in the last 2 years, we should know that, how the structure of the foreign investors are globally normally made. So if you look at the global asset allocations, normally US market accounts for almost 70% of the market cap globally. So by and large, whenever a global fund managers
talk loudly, people can't hear you. Or maybe I'll mute you, talk from your. Yeah.
So sorry, maybe I should repeat if it was not audible properly. So I was trying to explain that, why FPIs left and what is the course correction from here onwards for them. So before that, we should understand, how the global equity market is concentrated. So by and large, if you look at the entire global equity market, 70% of the market cap is captured by US itself. So it is very natural that normally any global fund managers or the large hedge fund managers, they will keep 70% of their asset in their home currency. So, and the balance is spread out across the globe. So it's not just only for the US hedge funds or fund managers. It is the same case for all the global fund managers, because dollar is the universal currency as of now. So the balanced money is spread out across the globe except for US. And out of that, there are two ways of looking at that flows. One is the global funds, and another is the dedicated emerging market funds. So countries like India, we receive funds from both the perspective, whether it is a global flow or dedicated emerging market flows. So we had been a net receiver of FPI's inflow for multiple years, but almost towards the end of 2024, we saw a kind of new theme emerging, that is in the form of artificial intelligence. And India was one country which was really not present in that ecosystem, and countries which were largely present in those ecosystem were economies like Taiwan or and Korea, जहाँ पे normally आपका जो semiconductors manufacturing होता है, it is sourced from those countries. So there was a tendency that a temporary money was pulled out from India, and that was allocated to these countries. Now, also, if you look at the chart over here, there was a kind of this was one of the problem that why a lot of money went out of India and flew to these economies, and that is reflecting the substantial outperformance of those indices. So right now, what could happen is that possibly once those kind of economies have already started receiving substantial amount of money, and their valuation has started capturing to a higher levels, the money could reverse to other emerging markets like India. Now, looking at one more aspect of this, countries like Taiwan or Korea, is that they are highly concentrated in terms of their index. If you look at they're largely electronics manufacturers, and there are few companies which dominate their indices, unlike India, which is broadly kind of spread out across multiple sectors and multiple companies. Yeah. So when we talk about emerging markets, there are broadly 24 countries which are classified under emerging markets by the global fund managers, out of which the top four are China, Taiwan, India, and South Korea. So India always used to be the second largest after China. But over the last 2 years, we have seen that the money after flowing out, India's weight has come down to almost fourth ranking in terms of total holding. So at the peak, we are somewhere close to 21% of the total holding by the emerging market equities. Now that has fallen to almost 14%. And as on date, as we speak, it has fallen to almost 12.5%. So probably we are, I'll not say at absolute bottom, but we are almost close to the bottom where FIS cannot afford to exit from India anymore. And in the past, we have seen that, every time there has been a level that we have reached to this 10-12% of holding by emerging markets, then it has started reversing. So possibly this is time that, we'll see, money started flowing back to India. Yeah. So there are another few points which will possibly give you more indication why that money should flow back to India. Every bull market for emerging market has started with a kind of reversal in dollar index, which is right now rightly placed. Be it 2003 or 2009 or 2017, we have seen that a weakening dollar has started always led to emerging market inflows. One more important point is always that whenever there is a difference in the spread between yield of US security and Indian securities, Indian government bonds, whenever the spread comes to almost 250 basis point, we have seen Indian economy started receiving more inflows. And right now we are almost at a spread of 250 basis point, which is at the trigger point, I would say. And the third most important point is the premium that we always used to attract in terms of valuation. So Indian markets always traded at a substantial premium to the overall emerging markets. It could be somewhere close to 100%, maybe 100 basis, but now that has fallen substantially. So at this point, when I was talking the previous PPT, that there has been substantial inflow to other countries and outflow from Indian market. So there is a relative valuation which is in favor of India right now. And at this valuation, again, I believe that foreign investor cannot ignore India and they will come back.
Yeah.
Yeah. So this is the relative valuation of the global emerging markets. So if you look at the chart over here, we have highlighted Taiwan, South Korea, Brazil, China, and India. So Taiwan historical P has been 14 to 16 times, whereas current it is 20 to 24 times, only backed by the simple fact that there is a lot of AI news that is going around. But it is substantially higher than the average. So that is not sustainable, we feel. And one more data point I would like to highlight is that in the Taiwan index, one single company called TSMC accounts for more than 50% of the weightage of the entire economy itself. I mean, the entire index. Unlike India, where the top 10 companies would be not more than 40%. So a single company driving the entire index is not sustainable. That's what we feel. Similar is for South Korea. Historically, South Korea has always traded 9 to 10 times P multiples. Right now, it is 16 to 20 times based on the calculation that you take. Again, if you look at South Korea, there are two companies, Samsung Electronics and ASIC Hynix. These are the two semiconductor manufacturing companies which account for 40% weightage of their index. Again, this is not sustainable. If there is a slowdown in the AI boom, whether AI boom will slow down or not, I'm not sure. But 40% weightage to two companies in an index is not sustainable. So this is not broadly diversified in any way. Unlike India, where we have a mix of financials, manufacturing, power, or be it any consumption sector. So whenever there is a reversal of trend, then the reversal could be very brutal and the flow could be very sharp. That's what I meant to say. If you look at Brazil, the historical valuation has been 7 to 10 times. Right now, it is 14 times. Why? Because Brazilian index is largely concentrated towards the commodity-led companies, like the largest iron ore company is in Brazilian company, be it a copper or aluminum company. So these are commodity companies which are very cyclical in nature. So they don't warrant a very high P. China, again, historically, they have been very cheap in terms of valuation, because in a lot of publication, you might have heard earlier that, China data is not that trustworthy at global level. So definitely the valuation is justified. Now, coming back to India, so historically we have seen India trading at a premium. Right now, considering that we are at a discount and a long-term average, we are below long-term average. In fact, then it is really right time that market will start pricing in accordingly. And the fact that Indian index EPS is likely to grow by almost 17%. That is a projected number. So on a PG ratio, that is a price to earning growth ratio, we are close to 1.2 times, which is not really expensive, right? Ideally, one time is good enough, but 1.2 times also is fairly good. On the contrary, if I look at uh, other economies or indices which are likely to grow only 8-10%, then in that case, a P ratio of 20 times looks on a higher side. So the logic is here is that concentrated economies which are growing 10% and a broad-based economy which is growing 17-18%, India, warrants a better re-rating, and that will eventually pan out over a period of time. So again, our point was that how emerging market flows could reverse, and to some extent it has started happening. If you look at, so in the last 10 years history, if you look at emerging market as an index has performed substantially, or maybe outperformed substantially to global market only in two major instances, and 2025 was one of them, where almost 30% return was generated last year. But the trend has started reversing in the last 1 and 3 months data. You can see 3 months it's almost kind of flat, and last 1 month it has been 13%. So probably the global allocators, the fund managers, have started realizing that it's time to reallocate their money to more sensible markets like India, and that is what you can see. Even the intensity of FI selling has come down. It has still been negative of late, but earlier you used to see almost $1 billion of selling every day. Now it has come down substantially, and it's a matter of time that it will turn positive. When it will turn positive, we don't know. But earnings growth, if I look at purely and the relative valuation that I'm rightly measuring in terms of at a global level, we are at the point that where everything seems to be rightly aligned for India. So this is about the earnings growth projected by various fund houses and broking houses for Nifty, and broadly the range could be 13 to 17%. But the consensus is unidirectional, that is positive growth, and 17-18% earnings growth if it is delivered. अगर 17-18% ग्रोथ आता है अर्निंग्स में, तो देर इज थंब रूल है कि उतना ग्रोथ आपका अर्निंग्स इंडेक्स में आना चाहिए लॉजिकली. So whether that will come or there will be a little bit more or less, the time will tell. But factually, it is highly possible going ahead. Yes. So some more data points. Yeah, if you can take, Yadi.
Okay, good. So we'll give some break to Siddharth, and I will take it up from here. He's having some throat issues. Yeah. So if you look at this, how our Indian economy, the real economy is shaping up, and how there has been a shift in the economy and the consumption pattern of India. This gives you a good picture. On the bottom of your screen, you can see the UPI transactions right now are at record levels of 24 to 27 lakh crores. And on a daily basis, there are 64 crore transactions which take place through UPI. This talks volume about the digital penetration in India and this has picked up especially after COVID, when people have realized that it makes sense to start using more of digital, and the penetration of smartphone and the use of digital has seen significant uptake post COVID. So, and this has not only been seen in tier 1 cities, but more so in tier 2, tier 3 cities, where we have seen a significant jump in UPI transactions. When you're talking of consumption, we're talking of premium consumption. In India, we have seen a massive record sales of auto numbers. And in the auto sales numbers, we have seen premium segment, which is the SUVs, seeing a significant jump in sales. It's no more the case of just owning a four-wheeler. It's the case of owning a premium four-wheeler like an SUV and the higher segment cars. And if you take a look at global giants like Tesla coming to India and selling their cars in India, that's a significant move where they are looking at India as a significant buyer, and the potential for Indian buyers of owning say, a car in the range of Tesla, BYD, and the likes of other MNCs. And if anything, we believe that with GST 2.0 and rate cut, which we had seen previously, and the 8-pay commission anticipation, all of this combined together will lead to a significant re-rating of consumption patterns in India, and the growth that we are looking at, which Siddharth was also talking about, is going to see a significant uptick. And if anything, the slide that previously Siddharth was talking about, we are sitting at a 5-year low if you're talking about on the earnings PE, on the Nifty PE versus the earnings. If in 2020 post 2020 we were feeling that Indian economy is here to grow and we should participate in Indian equity markets, we are sitting at a 5-year low in terms of PE. So it can't get better than this if you looking at taking exposure to the Indian equity markets. Talking of bank credit growth, last year YOY, rather 2026 April to 2025, we have seen a 16% YOY growth in bank credit. So that talks about the the capex cycle coming back. From government capex, private capex is also making a comeback, and the consumption cycle is also seeing an uptick. With that, the GST collections were at record high, some 2 lakh crores GST consumption, second highest monthly in history. And this was also because of durable consumptions and the lights, which saw a significant uptick. Similar is the case with manufacturing and composite PMI numbers, which has seen an uptick, though there was a slight softer than the previous month. But this is something which we feel once the oil settles down and the dust settles down, the noise around oil settles down, you will see an uptick in the manufacturing PMI as well. Now, why are we talking about all of this, and what could be the key catalyst? क्या reasons हो सकते हैं? What we call as 4 levers for FIs to come back, FIs के वापस आने के लिए, and earnings growth वापस आने के लिए. हालांकि इसमें भी डाउनसाइड आ सकता है, but given the fact that a lot of positives are already in place and a lot of discussions are going on, we believe that oil de-risking is already happening. Oil prices जो spike हमने देखा था, slowly and gradually वो थोड़ा थोड़ा नीचे आने लगेगा. स्ट्रेट ऑफ हॉर्मुज विल इवेंचुअली ओपन अप. हालांकि अभी इमीडिएटली उसमें अभी भी क्लोजर है, विच इज वाई क्रूड ऑयल हैज स्पाइक्ड अगेन back to $97-98. But we believe gradually हमको crude oil will be below $90 somewhere in next 5 to 6 months. That will give a lot of comfort for FIs to come back and investors to remain intact in Indian equity markets, because the major impact that we face is from the spike in the crude oil prices that hits our current account deficit significantly. Every $10 hike per barrel in crude oil hits 40 basis points our current account deficit. So that is significant. Now every $10 fall in crude oil will improve our current account deficit by 40 basis points. So आप imagine करिए अगर $90 के नीचे crude oil आ जाता है, तो that will have a significant impact on our current account deficit, and will give more room in the hands of RBI and government to initiate more policies and give more money in the hands of the people. Right now, RBI is not looking at cutting interest rates. Rather, they might consider hiking, but maybe right not immediately. अगर crude oil यहाँ से significantly cool off हो जाता है, inflation comes back to previous RBI range, then maybe we could be in for a rate cut. But that is a long shot. अभी immediately नहीं होने वाला है. रुपी आरबीआई ने इंटरवेंशन किया था, स्पॉट इंटरवेंशन किया था, कैप्स लगाए थे नेट ओपन पोजीशंस पे बैंक्स पे, जिसके चलते रुपी का जो सिग्निफिकेंट डेप्रिसिएशन था वो स्टेबलाइज हुआ है थोड़ा, उसमें अरेस्ट लगा है, एंड रुपी हैज क्लॉड बैक somewhat of its sharp depreciation that it had seen. One of the major reasons why we believe Indian economy will see again a revival is the US trade deal, and in US is now pushing to go ahead with this trade deal ASAP, क्योंकि यूएस में भी हमने देखा है कि ये वॉर के चलते सिग्निफिकेंट प्रेशर्स उनके यहाँ पे भी देखने मिला है, उनके इकोनॉमी में इन्फ्लेशन वापस उनके कंट्री में बढ़ गया है, इकोनॉमी इज अगेन इन डोल्ड्रम्स, सो दे वांट टू गेट दिस डील एसएप, और वो चाहते हैं कि इंडिया के साथ ट्रेड डील हो. इनफैक्ट इफ यू रीड द हेडलाइंस अ वीक और टू बैक, there are talks already started to take this further, because वो interim एक ट्रेड डील हुआ था, उसको एक फाइनल पिक्चर देना बाकी है, एंड वी बिलीव कि ये जो ओवरहैंग है वो खत्म हो जाएगा बहुत सून, और जैसे ही वो होता है तो इंडियन जीडीपी विल सी एन अपटिक, बिकॉज अगेन एज इंडिया इज अगेन एक्सपोर्ट इकोनॉमी, लॉट ऑफ इट इज डिपेंडेंट ऑन यूएस, हम बहुत ज़्यादा एक्सपोर्ट करते हैं, ये ट्रेड डील अगर हो जाता है इट विल लीड टू अ सिग्निफिकेंट री रेटिंग of India as well. And like Siddharth was talking about, if you are looking at an EPS growth of somewhere around 17 to 18%, then of course we will see a re-rating of the Indian equities. And what could lead to these re-ratings? Probably financials is one which will continue to drive. Consumption is second. Power is something that we're looking at. Discretionary spending in consumption, I meant by GST 2.0. All of this will transmit into earnings re-rating, and we will see a good rating of India, at least from the FI point of view. Now, the bear case scenario, what if all this doesn't happen? अगर कुछ गलत हो जाता है, क्या क्या गलत हो सकता है और उसका इम्पैक्ट क्या हो सकता है इंडियन मार्केट्स में, हमको वो भी ध्यान में रखना बहुत इंपॉर्टेंट है. देयर कुड बी अ कंटिन्यूएशन ऑफ अ स्ट्रेट ऑफ हॉर्मुज ब्लॉकेड विच इज राइट नाउ गोइंग ऑन. अगर आज वापस से शायद यूएस और ईरान का नेगोशिएशन वापस स्टार्ट होने वाला है, अगर वो समहाउ नहीं मटीरियलाइज होता है और स्ट्रेट ऑफ हॉर्मुज कंटिन्यू रहता है इन क्लोज्ड स्टेट, तो क्रूड ऑयल में वापस हमको स्पाइक देखने मिलेगा विदाउट अ डाउट, एंड देन इट कुड ऑल्सो रीटेस्ट इट्स प्रीवियस पीक जो रिसेंटली $128 का टेस्ट किया था. then it can have a major impact on Indian markets again and the Indian economy, because then you will see a spike in the inflation, current account deficit again takes a hit, your 10-year GSEC yield can again spike up to beyond 7, and then there is a high likelihood that Indian equity indices, especially large cap, we'll see Nifty could retest its previous low or maybe around those levels, and rupee could also take a hit. अगर वैसा कुछ होता है तो क्या करना चाहिए हमको? What we will do is we will redeploy, we will do a reshuffling of the portfolio, we will cut down, trim down exposure to equity, sit on cash or maybe safe haven, and look for right opportunities again to redeploy that money in stocks as and when the time arrives, and look at domestic consumption, which government has been focusing. Government कंटिन्यूस फोकस कर रही है कि डोमेस्टिक कंजम्पशन को बूस्ट मिले, उस पर फोकस करे और फाइनेंशियल से फोकस करे, एंड जिसका इम्पैक्ट ऑयल से सबसे कम हो, ऑयल और गैस और एनर्जी रिलेटेड स्टॉक्स जिनसे जिसका इम्पैक्ट सबसे कम उन पे हो, वो वाले से फोकस करेंगे. अगर अर्निंग्स, now am I audible? Yeah. Hi. Extremely sorry for this small little glitch that we faced. There was some internet outage that we faced. We are back. My screen is visible and I'm audible. If somebody can give me a yes on the chat. Yes, yes. Thank you so much. Extremely sorry, everyone. There was a small glitch, which there was an internet outage. We are back. Okay, so we were talking about the bear case scenario. What happens if what we had anticipated doesn't go as per our expectations? So first is we were talking about a full closure of Strait of Hormuz. Second is if earnings disappoint, in that case, we will do a reshuffling of the sectors. We will not completely sit on cash, but yes, we will do a reshuffling of sectors where there is earnings visibility, strong management guidance, strong order book, and we have a visibility of long term. We will move money to those sectors and stocks, and we will also look at sitting somewhat on cash for deployment at a better opportunity. And if trade winds for some reason unwinds, while we are constantly monitoring this, and we understand that US also wants to get into a trade deal, but we also know how Mr. Trump is, and he can flip-flop any point of time. So what if the trade deal doesn't go through, and there is a rollback of the trade deal and the tariffs go back to pre-interim deal, which was a 25% plus, then the export sectors take a hit. FPIs that we're anticipating can take little longer to come back, and again there could be a bit of a pressure on rupee. In that case, we will again do a reshuffling of the portfolio. Anyways, we don't have a lot of stocks and sectors in our portfolio currently which have exposures to companies which have export into US. But in that case, we will again relook at our portfolio, maybe trim exposure to pharma and IT companies. Pharma will have a knee-jerk reaction, not a long term, because pharma companies, they don't have an option but to take drugs from our pharma companies. So that is something that we will do. In these three scenarios is what we are looking for in case of bear case scenario. But again, like I mentioned, in case or any of this happens, it will all be a knee-jerk reaction, because historically we have seen whenever this kind of a situation arises where Indian equities have taken a massive hit, combined by FPI's outflow, significant outflow, and valuation gap narrowing down between earnings growth and the Nifty earnings and the Nifty PE, that is the right time that eventually markets bottom out and they start to go up. And along with that, if I also take a look at some of the fear indicators like your volatility index and your standard deviations, they also point that majority of the negativity is already priced in, and from here on we are not likely to see a significant derating of Indian equities. Now, some of the sectors that we are a little positive on, financials for sure, because we believe that yeah. So Siddharth, you can take that up.
Yeah.
You can unmute.
Yeah. So financials as a sector is something we would like to continue to hold for a longer period of time. The reason being, if you look at the last historical 4-5 years, Indian banks and NBFC are at a situation where they have provided for most of the bad assets, and provisioning coverage ratio are at all-time high. So that gives an indication that any negative outcome is very likely to happen. And even if there is a negative outcome, the banks and NBFC are in a position to absorb kind of possibly bigger shocks if at all that warrants. But within financials, again, we have played through some capital markets theme and maybe equity market theme, which will generate substantial earnings growth going ahead. In consumption, instead of direct consumption, we are positive on auto. One way of looking at auto right now is not absolutely the auto sales number, but rather the premiumization that is happening in the auto sector, and auto component companies which are going to benefit from the premium segment, as well as the regulatory changes that is happening. The government is spending a lot of money on safety and security area, as well as kind of new technology which will benefit the auto companies in the coming years. Capital goods is one area, and the entire manufacturing sector is what we are bullish on. And in fact, this is one of our highest weightage in the portfolio, because everything that we end up consuming as a country, we need more and more productions to happen. And for that, we need power. And time and again, we see and we read that a lot of capex is being announced by government for power reforms. So instead of playing direct power producing companies, what we have played out is the possibly the power equipment manufacturers which have a very strong moat and kind of see the power ancillary segment needs a lot of screening process and approval process. So end of the day, the companies which have been supplying to the power grid or the government entities end up winning larger orders. So when we talk about power sector, one should not look at only the power producing companies, but the entire value chain and the companies which supply us critical equipments in the power sector. They end up benefiting more because their responsibility ends the moment they end up supplying the order and they generate cash out of it. Instead of relying on the power producing companies which have a very long gestation period of completing their projects, and they are dependent on very high capex. So asset light model and faster cash generation companies in capital goods are what we are owning in the portfolio, and we are positive about it. Metals is something we are positive. As of now, we may not have very high holding in that, but this structurally looks very good from a longer point of view because of the global supply tightness, which is likely to remain for coming years. And any good opportunity in that, we'll like to play on that. IT as a sector is something we would like to avoid because there is no clarity till now. And in the last couple of days, whatever IT companies have come out with results has not been good enough, and the outlook doesn't seem to be improving anytime soon. Also, very small companies with a very high beta is something to be avoided for the timing. And of course, right now that already equity is a very good valuation level, debt is something we would like to not go for. Yeah, you can take it.
Okay. So the question that we are trying to address here is it the right time to invest? Yes, definitely we believe it's the right time to take exposure to Indian equities because the long-term average PE of Nifty is somewhere hovering around its long-term average. So it makes sense to start taking exposure to Indian equities. Use a systematic deployment strategy to beat the markets that we adopt in our own PMS is we go through a staggered deployment route of 50% in first go, and then staggered approach of 10% in meaningful dips. And that has actually helped us in the significant outperformance that I showed at the start of the presentation, which has led to this us ranking 5th on the PMS Bazaar. Will FPIs make a comeback? Yes, all the entire session was all about this, that the FPIs will eventually make a comeback. Give it some time. 5 to 6 months, and you will see re-rating and FPI is making a comeback. And the sovereign wealth funds are also looking at raising allocation to India. So the broader flows will come back to India once the Strait of Hormuz opens up and the crude oil comes back to its mean prices, and the kind of reasons or the deployment reasons that people were looking to avoid, that will be eased. How worried should be about the rupee? Not really, because it was more of a dollar-driven drag that we had seen on the rupee. It's not a fundamental weakness that we are seeing on the rupee. And if, to be honest, if you take a look at most of the countries that want to focus on export as well, they do tend to weaken their currency somewhat. So we are not going to see a massive uptick in the rupee, but yes, we are not going to either see a massive depreciation in the rupee. Most of it is done. Now, a lot of people ask us that should we move our money completely to debt? No, definitely not. Because if honestly you ask me, one should look at deployment in equities or taking exposure to Indian equity markets aggressively when everything around you is not going as per what was prediction and people are fearful. It is right time to act when everyone is fearful, and right time to rather book profits when everybody is very gung-ho on equity market. So we believe that this is a good time to start looking at equity as an asset class and start deploying money, which we have done, and remain little underweight on especially long-term debt. Short-term debt is something that one can look at, but again, equity is something that should definitely form part of the portfolio. Now, in 1 month, like I mentioned, how does India winners compare to passive BFC 500? So this is something that we have been able to generate an alpha because of active management, active deployment strategy, and active profit booking strategy as well, which is why we have been able to generate this kind of an alpha through a drawdown phase, through a drawdown period, with maintaining a beta of less than 1, making sure that the downside is protected in the portfolio while there's an opportunity for significant alpha to be generated. So this is how we have designed our PMS, and we have deployed money, and we have carefully shortlisted companies and sectors in the portfolio to keep it concentrated, to keep it under check, and have a proper deployment and an exit strategy. Now, what are the way forward for this? So what we look at is FPI exit was just a rotation, not a verdict. Domestic capital has matured to absorb that, and we have seen that in last 1.5 years. The earnings valuation gap has flipped in India's favor that we have mentioned, and like was mentioning, it is at a 5-year low. So if we were looking at an opportunity to take exposure to the Indian equities, the time is now to start some deployment. And when oil clears and the rupee firms, the return of FI's money will be back to India, held up by the domestic buying, which is not going to drift away. If anything, still the DIs are sitting on cash, and the constant inflow of retail is also happening. So stay invested, prioritize quality and earnings visibility, favor domestic based companies, look at consumption, look at power, look at financials. This is what we are also focusing on in our portfolio currently. Keep powder dry, because this is also that we are maintaining. We're still sitting on a good to 25% cash to use opportunities that come through to deploy that additional money. And you should always keep buffer of 5 to 10% cash and deploy in tranches. This is what we believe. So this is it. So a small session from our end. Apologies again for the small glitch that we faced. The floor is open for Q&A. If you have any questions, you can put it in the chat box, and we'll be more than happy to answer. Both Siddharth and I are here to answer your queries. Thank you again for joining the call, and going ahead, we will have many more such calls subsequent months. If anyone has any query, please feel free to post it in the chat box, and we'll be happy to answer them. We'll wait for a few minutes for anyone if there is any query, if anyone wants to ask anything. Ticket size. So the minimum ticket size in a PMS is 50 lakhs. That is SEBI mandate. That is what we are also maintaining. Anybody can start with the minimum ticket size, which is 50 lakhs. Cash plus portfolio. Yes, yes, yes. A mix of both portfolio and cash. Hi, so the nice expectation. Profit sharing ratio. Okay, so we'll go one by one. With monsoon expected to be subpar, what is your take on discretionary consumption trends, effective earnings, along with second order impact in Q1 related to spike in crude oil and logistic cost? You would like to take this other way?
Yeah. So, so the monsoon prediction, keeps on changing every year. As we progress, it can really differ from the actual predictions. But having said that, monsoon is very important part of the Indian economy. But gradually, over the last 1 decade, we have observed that only few sectors get impacted due to high monsoon or low monsoon. Be it certain consumption items like high-end electronics like refrigerator, AC, and all. Rural consumption has been a little more resilient despite in any years, even if there is a lower monsoon, because of the government support that comes in. And so no major disruption is something we don't expect a major disruption as such because of any disparity in the monsoon fall. And
as far as profit sharing is concerned, so there are two models that we have in the PMS. One is fixed and one is hybrid. There are different categories in this fixed and hybrid. So we can take this offline because different AUM has different profit sharing and models, and both in fixed and variable. So we can take this offline. 2.5 is fixed, but generally 2.5 is fixed. 1.5 on the hybrid part. 1.5 is fixed, and 15% is sharing over 10% capability. But if the AUM is large, then this comes down. Also, with West Asia crisis, what is your take on government
capex
while reallocated and chances of private capex being deferred? So, Mahesh, there are chances of it's already been deferred. Honestly, if anything, this West Asia crisis is something that is done and dusted with. Government is looking at reallocating capex and pushing private companies to increase their capex. And once the dust settles down, you will see capex coming back, if not from the government side, but at least from the private capex that will make a comeback.
Also, to add on to that, The ability of government's capex comes from the net GST collection, which is still very healthy. For the month of March, it was almost 2 lakh crores. So there is no major slowdown in the tax collection. So no major slowdown in capex can be expected. It can continue to be strong.
We can take few more questions if there are any.
Will large banks have deposit accretion challenges? Doesn't seem so. So far, the numbers has been fairly decent. In fact, deposit growth had been a challenge for multiple years, but it's almost a 12 to 13% deposit growth for the industry is not bad, and that is likely to be achieved. It will not be a major concern, I think.
Maybe we can take all these questions offline as well, with respect to specific sectors. Okay. Can we wrap up the call? Are there any more questions? Okay. I guess there are no more questions. Thank you all for joining. As a closing remark, again, I would like to thank all our partners and clients for showing faith in us in the first month of inception month of our PMS. And we would like to continue to see that kind of faith in the subsequent months as well. And like I mentioned, we will have these kind of client con calls and partner con calls at a periodic level every month going ahead. Thank you all.
Thank you
for joining.
Thank you, everyone.